Hi everyone, let's go through my medium time frame and low time frame scenarios, including new ones and potential trading setups. Starting with the bearish medium time frame count, where we're looking to end this wave 5 in this area over here, with this final impulse being an extended wave 1 impulse, which means that this wave 1 over here is extended and therefore the targets of wave 2, 3, 4 and 5 are adjusted. The most common target then for a wave 2, if wave 1 is extended, is between the 0.236 and the 0.382. Wave 3 does not have a target. Wave 4 most common target is changing to the 236 and the 382. And then the most common target for a wave 5 inside this scenario are these fibs over here, the 618 and the 786, sitting at 28.9k to 30.4k. As you can see, price did wick inside this area already, which can be the high of a wave 5. So therefore, we can expect then some movement to the downside. However, another move to the upside is also, of course, still possible. The question then is that going to be a wave 5 or is this going to be a corrective pattern? But let's observe that on the lower time frames. The potential trading setup over here is that shorts can be laddered inside this target area and then stop loss above for then a move to the downside. Of course, no financial advice, but this is a setup based on Elliott Waves. If we then go to the medium time frame very bullish scenario, we have wave 1 on the high time frame ending over here after the big impulse, wave 2 ending over here, and then we have basically 3 1-2s. I'll show you on the lower time frame. We have a 1-2 1-2 and this then being another 1-2. Again, I'll show you on the lower time frame for then a big move to the upside. What I don't really like about this scenario though is that this wave 2 over here is very short compared to the development of wave 1. So usually a wave 2 time-wise takes at least 38% of the time it took to develop a wave 1. But this wave 2 over here is only 23% of the time that it took to develop wave 1, which is very short. Another rare occasion in this scenario is that wave 2 over here only hit, or almost hit, actually missed out on hitting the 0.382, which is a rare target for a wave 2. And then this blue wave 2 over here also only hit the 0.382, which again is a rare target. So there's basically 3 rare things in one scenario, being the time of 2, wave 2 over here with the target, and then the blue 2 over here with the target, which doesn't make this scenario be a preferred scenario for sure. Also, the volume is not really working in favor of this scenario, because if this is a big yellow wave 3 to the upside, you want to see big volume coming in. But as you can see, volume has been going down and down and down the higher we go and the longer we range. So that is not really supporting this scenario. If we then go to the lower time frame counts, the first one that I like to show you is the most bearish one. In this particular scenario, wave 5 is already finished. This is some sort of a diagonal in wave 1. So we then have a 1, then a wave 2, and eventually looking for a 3 to the downside. Now, of course, it's also possible that this is 1, this is 2, and then we have another some sort of a 1, 2, and eventually move to the downside. Basically, this scenario is just an impulsive move to the downside wherever wave 2 is going to be. We expect to see a bigger wave 3 to the downside, at least taking these lows. That is most important. These lows have to be taken for this scenario to be valid. But still, there is like a thing with this scenario where this wave 1 is not very clean at all. Usually, if this is a leading diagonal, so the 2 points, the 2 lines are diverging to one another, you don't want to see waves like wave 3 should be shorter than wave 1 and wave 5 should be shorter than wave 3. But in this scenario, if this is a 1, 2, 3, 4, 5, this wave 3 is longer compared to this wave 1, which is not allowed in a leading diverging diagonal. So then you have to start thinking about an expanding diagonal where the lines are going away from one another, but that is very rare. So that is definitely not preferred. So there's some stuff going on in the wave 1 that I don't really like from an Elliott Wave perspective. Then we have a wave A over here. Well, my opinion, if this is a wave 1, then this looks like an impulsive structure in a wave A, which then has to be followed by a 3 wave here in B, where I then think this B should actually go up here, but I'll explain that in a second with the other scenarios. And then eventually a C to the upside. But what happened now is that we took the lows. So we took the lows of this wave 1 over here, which basically means that if this wave A is an impulsive structure to the upside, a 5 wave move, then the correction is not allowed to take the low of wave 1. So this move over here, you're thinking about wave 2 being a zigzag, which is a 5-3-5 correction. But then wave B is not allowed to take the lows of this blue one over here. But now what happened, if this is an impulsive structure, price now took the lows of the beginning of that impulsive structure, which is not allowed. So this cannot be a 5-3-5 move anymore. Instead, then this has to be some sort of a three-wave structure, most likely then also still an A, because we're going to be looking at an expanded flat structure or a WXY. So this is either an A or W, followed by a very, very big B or X before then another move to the upside. And it doesn't look that great, right? Like when we look at this scenario and you look at this particular change in this scenario, this update, not my favorite. If we then go to the very bullish scenario, then what we see is the same as the medium time frame. So again, wave 2 over here, then another wave 2. But you can see wave 2, the blue wave 2, then finished after a WXY. So a W over here, expanding flat, zigzag in X, and another zigzag or WXY in eventually the wave Y to end wave 2, hitting the 0.382 for support. And you would expect a big move to the upside, which, yes, it can start with another 1-2. It's just that you get sick of all those 1-2s, and of course, as mentioned on the medium time frame, the volume is going down. So over here, we then have this as an impulsive structure in a wave 1, followed then by a WX, and then this being a 3-wave in Y. So now what happens is in this particular scenario, one can ladder the longs in this area over here. For a wave 2, the most common target of a wave 2 by far is the golden pocket, which we have hit right now, but also the 786 is still a common target. The 886 is a rare target. So one can ladder the longs in this particular area for then a trade to the upside following this scenario. Stop loss below the lows, and eventually the moon is the target, because with this very bullish scenario, you really expect prices to at least go past 40K eventually. On the macro scenario, the really high time frame scenarios, the targets are between 100 and 174K. So yeah, you just expect price to boom to the upside. Now this is not necessarily, as mentioned, my favorite scenario because of the volume, because of these two wave 2s as well. It just makes this scenario quite unlikely. That doesn't mean that this trading setup cannot play out, but then this trading setup is likely part of another count, which I will show you now. So what do we see? We see a lot of detail because I've been messing around on the lower time frame. So actually let's go to the, start a little bit higher. So what I'm looking for over here is this being the blue W, followed then by a 3-wave in the blue X, and then we have a 3-wave in the blue Y, right? So we have a WXY scenario, then expecting more upside in this particular scenario. Now, if we go through this in a little bit more detail, I see the following. The beginning of W over here is a zigzag, which is an ABC. The most common target for a zigzag wave C is in between the 1 and the 1.236, taken from the high of A to the low of A to the high of B. As you can see, price hit this area very nicely indeed for then a bounce to the upside. Perfect. Then inside this wave X, the blue wave X, there's also a 3-wave structure, which then is a 3-wave in a 3-wave in B, followed by an impulsive move wave C. That basically means that we have an expanding flat in wave X, with the most common target for wave B in an expanding flat being the 1.236 and the 1.38, which again has been hit very nicely before then an impulse to the upside, where the most common target for wave C is in between the two 1.618s. One is a Fibonacci pulled from the high of A to the low of B, and the other is a trend-based Fib extension from the low over here of W to the high of A to the low of B. Then you get this region over here for the end of a wave C. Then we move to the downside again in a wave Y, and as you already noticed probably, wave Y is very long. This is basically a one type of structure, like one 3-wave structure. This is also one 3-wave structure, but here we have one 3-wave structure, a second structure, and be looking for maybe even a third structure now to the downside. So wave Y is very long, but I have alternatives that I'll show you in a second. The first part of this Y wave is then a zigzag, with this being a wave A, a wave B over here, 3 waves B, and then eventually a move to the downside in a wave C. Again, most common target of wave C is in between the 1 and the 1.236, taken from the high of X to the low of A to the high of B. So this then being the most common target. Then we have in the second part of this wave Y an expanding flat. So this is the end of the first structure in an ABC, and then we're looking for an ABC. Now the only way this can be an impulsive structure is when it is a wave C. This cannot be a wave 1 because price went below the origin of these lows over here. So if this is a wave 1, you would expect a 2, 3, 4, 5 and more upside. But because price now showed us that it went below these lows, this move over here has to be a wave C. It's an impulsive structure. It's a nice 5-wave structure as well, but it has to be a wave C, which then means that this is an A, this is then a B followed by a C. So we have an expanded flat over here, followed then by another 3-wave structure down in this blue wave Y, which can already be finished, but I would prefer to see another low made. And actually the main reason for that is that we missed out on hitting the target box. So we did take the low over here and another low over here, not very cleanly, not a swing failure pattern, at least on the 15-minute, which is where I like to see it. So yeah, that's not too cool, but we actually missed out on hitting the target box over here as well, which is between 27,162 and 26,936. So I would like price to come down actually once more, take the confluences that are over here, like hit the confluences over here before then a move to the upside. That would be perfect in my opinion. So yeah, what we then expect is after this expanded flat, this being a W or an A, followed then by an X or a B, and then eventually a C or a Y to the downside. And inside this area where the most common target for the blue wave Y, so this is for the blue wave Y, is in between the 1 and the 1.236, taken from the high to the low of W to then the high of wave X. And as you can see, the target box over here has nice confluence as well with the target area for a wave Y. So this is now a very, very interesting scenario indeed, and likely to be my preferred one at the moment. Of course, clear invalidation with this trading scenario is that the stop loss should be below these lows, because if price is going to go below these lows, I expect to move to the downside to at least 24,850, where the next support area is, because there's simply not much support down there. And in this scenario then trade it to the upside, laddering the positions inside the wave Y area over here, and then of course again stop loss below, trading it to the upside. The alternatives then in this particular scenario is that instead of this being a WXY, we now have a WXYXZ. And that is because this wave Y in the other scenario, this one is so long. So I've been thinking, okay, this can be then a W, then we have an X, then we have a zigzag in Y, an X again, expanded flat, and then another Z. Now usually wave Y is reaching the 1-to-1 of wave W as a target in a WXYXZ scenario. So this trend-based sub-extension is taken from the high of W to the low of W to then the high of X. And then we have the 1-to-1 over here. This is the most common target for a wave Y in a WXYXZ. But at the moment as it stands now, this scenario, or at least wave Y in this scenario, stopped over here after zigzag. Now there's no problem, there's nothing saying that is not possible, but it didn't hit at least the most common target for a wave Y in a WXYXZ, which is the 1-to-1 here on the chart. So after that we then have wave X, and then if we look at the target for a wave Z, you can see that the most common target area for a wave Z is in between the 1 and the 1.236, taken from the high of W to the low of W to then the high of this X over here, which also again has nice confluence with my target box. So dipping again inside the target box would also mean dipping again this area for a wave Z. Before then the trading setup is exactly the same, little bit lower entries though now, and also the stop loss would be the same, and then trading it to the upside. So this is the potential trading setup, and then a WXYXZ, which as you can see with the target area, it is quite similar to wave Y. It's just a little bit lower compared to wave Y. So in this scenario, price already hit the 0.618, the orange line over here, which is a rare target for a wave Z. It's not a common target, it is a rare target, as you can see, very nicely respected. But I would like to see price, as mentioned, come down to hit this target box, to be honest. And then the final scenario that I have is that wave X is a lot bigger. So in this particular scenario, we then have here a W, then we have this as a wave X, like the first part of a wave X, like another W, another X in X. Yeah, this is going to be complicated now. So we have a WXY, and then inside wave X, we have another W X, Y. So in this scenario, we have a very big wave X before we now expect a 3-wave move to the downside. And in this scenario, the target box for a wave Y, the most common one, is over here, between again the 1 and the 1.236, taken from the high of W to the low of W to the high of wave X. And also another less common, it's still common, but less common target for wave Y is the 0.618, which we've hit and very nicely respected. But again, we didn't hit the target box, which is something I don't like. So I would like price to come down once more, hit the target box. Then the trade is the same, basically trading setup is the same as the others, where eventually you'll be looking for more upside to come. So I hope this video was helpful or valuable to you. In the timestamps of the video, I'm now writing same, update or new, and I will write in my pinned comment below this video what that means. I'd like to thank you for watching and subscribing, and I see you at the next one. Bye bye.